Hey, welcome everyone. Tom here from Park Avenue Trading, your chief dealer, keeping you sane in these insane markets. I had an email sent to me by, I guess we could say, a new follower or a student, and he really picked up on the Fibonacci method that I put out in the How to Day Trade recent video. And I just wanted to go over that. He wanted a little bit more on it, so I want to basically give him a little bit more. So the first thing that we have to realize, like when we're using Fibonacci, the way I was taught to use it, and the way I kind of reformed it in a way, is that the first thing I do is I change the 0.786 level to 0.82. And if you'll notice, there's one of the subscribers here that's been following that for years, and he's been using it very, very successfully. It's just it 786, there's always a lot of skid through that price. So I found that 0.82 worked a little bit better. So just going over like an additional lesson. Okay, if we notice this marketplace, so we got, oh, here we go again with this thing. This marketplace really went into a nice downward movement. Okay, and we had like a triple bottom in this area over here, and the marketplace started to trade up. Yet it has not surpassed that high. Okay, so therefore we are still theoretically in a retracement, okay, off of that high. So what do we do? Well, the first thing that we do is we realize when I do a Fibonacci measurement, when I'm looking for a fib measurement, now this is a 1 hour chart. Okay, you could do this with 30-minute charts, 15-minute charts. You could do it with 4-hour charts, daily charts. Of course, the daily chart's going to be bigger movements. Same thing with the 4-hour. But the point that we have to remember here is that we're looking for resistance. The marketplace made its move up, and every market basically is a to and fro type of action. It's always it's like when you're working out, lifting weights, it's a push and pull. That's the only way that you can get muscles, right? Which I haven't been to the gym in like 8 months because I pulled out my shoulder because I'm 59. I got to get back to the gym. But I digress. So with this market, what you would do is you would go to, like, we have this recent high here, or this recent high, this double top right here. We would go to the left and find the highest point that we have, and we would come down and we would throw our Fibonacci levels up. So I have a video that I'm going to put a link to too. It's called the Coffin box. And generally it says that movements, the idea of the Coffin box is that movements stop in the box between 0.618 and 0.82. Now, is it exact? No. I mean, but that's the Coffin box. So once you break the Coffin box, you could basically say, well, I could take a trade. I could go short with a stop above the 0.82 level, right? So that's the idea, like right here, it's like here's 618, here's the Coffin box, really, right? It's like right there is the Coffin box. Okay, that's between the 618 and the 0.82 level. So that was basically saying, okay, we went up into the Coffin box. We could not get above 0.82. The marketplace could come back down. But where is it going back down to? Well, now we're using just basically market law, like, okay, we got a low, we got a high, we got like this slightly lower low, low, slightly higher low, then we got a slightly higher high, and then boom, we got a deeper low. Okay, so the first warning is like this level right here, just exactly what we were talking about in the other videos, in the day trading videos. Like, that is the point. Now this is a 1 hour chart, so I mean, not talking out of both sides of my mouth, is this really a significant low? Well, off of a 1 hour chart, it is, because it was the low that wasn't surpassed until it broke here. Okay, so really the warning or the break point for this is 159.04. Okay, if it breaks 159.04, where are we going? We're going back down to 158.35. Now you could do the opposite. Now, and um what he was pointing out to me was like, okay, we had the run down, and he was doing the opposite for, basically he was using the fib levels as a support point for going up to resistance. But it's really the opposite way. It's like you would go from this high and throw them down to find your support points. And then there's the coffin box on the opposite side. You know, the coffin box, markets usually die between the 0.382 and the point, I actually use a point like 1.6. I don't use that 0.27. I even remember what the number is really. So that's just like a really brief lesson. If you have any questions about Fibonacci, I used to trade Fibonacci a lot. I mean, you really, I think if you want to go to like Fibonacci, like, there's a Fibonacci queen out there. I forget her name. I mean, she trades Fibonacci levels. I don't really know, I believe she's really good. She's got a big following. So, I mean, that she's probably the one. I think it's Linda Bradford, I think her name is. But, she's been around a long time trading fib levels. So you should read, like, she's got a book, read it, little self promotion. Forex Confidant's got Fibonacci in it. It's got my technique, adding the 8-2. I'm trying to think of any other preeminent trader that uses fibs. Off the top of my head, I can't remember. I don't want this to drag on, but just as a side note, sterling dollar is a dog. I've been waiting for her to break 133.60 for like 2 hours now. It just doesn't want to do it. Dollar yen is getting weak again right now at 143.59. I sold at 144.30. That was a good sale. Rye, because it was up by the top that I talked about in the market analysis video this morning. So anyway, I hope that helps. If you have any questions, just hit me up in the comments. Also, get on over to Park Avenue Trading, get yourself a free ebook. And remember, always dance, in the party, but make sure you're dancing close to the door. That is a fantastic saying. Enjoy the party, but dance near that bloody door. Cheers.